floor to Purnima and request her to take it further.
Hello, everyone. Wish you all a very happy new year. Thank you for joining Wipro's Q3 earnings press conference. We have with us Thierry Delaporte, our CEO and MD, Stephanie Trotman, our Chief Growth Officer, Jatin Dalal, our President and CFO, and Saurabh Govil, President and CHRO. I'd now like to hand it over to Thierry for his opening remarks.
Thank you very much. Good evening, everyone. Thank you for joining us today. First, I'd like to wish you all a happy new year. At Wipro, we are starting the year with hope and a lot of momentum and purpose. And we'd like to wish health and success to every one of our friends in the media. Across the globe, the new variants of the COVID-19 virus are spreading rapidly. I cannot say this was unexpected, but it's a dampened. And nonetheless, as I said to all our colleagues at Wipro, mask up, take your vaccine, and let's help stop the spread of this virus. Now, despite the pandemic, we have delivered a fifth consecutive quarter of excellent performance, strong growth in revenues, accelerations in bookings, sustained operating margins, solid operating cash flows. I thank every one of our employees who helped us achieve this. These results, they reflect their passion, their dedication, and inventiveness. I must say, I was really glad to see that our colleagues have taken the time to attend to their health and well-being while continuing to serve our clients with integrity and zeal. Our revenue growth during the quarter was at 3% in constant currency terms and 27.5% year on year. In the first 9 months of this year, we've grown at 28% year on year. This is nearly 6 times faster than the average growth rate we've had in the last 10 years. We've been consistently growing at or over 3% for 5 quarters now. This is because of our improved execution abilities and followed through on our business strategy that was established, if you remember, in November 2020. Our growth continues to be broad-based across all our key markets, service offerings, and most of our sectors. We have added also about 34,000 new employees on a net basis in the past 9 months. To give you a sense of proportion and pace, we have added in 3 quarters what took us 11 quarters in the past. Now, looking at the demand environment continues to be robust. Our growth, our pipeline, our order booking all reflect that. In fact, our pipeline shows a healthy mix of medium and large deals across all our business lines. We also continue to see rapid expansion on small and mid-sized deals, which represents growth in our existing accounts as well as expansion of our market portfolios. Order book, which is, as you know, the best measure of the demand environment, has grown 27% on a year-to-date basis in terms of annual contract value. In fact, our bookings have been the highest ever. In Q3, we saw a 50% year-on-year increase in the total contract value order booking for deals in the $10 to $30 million range. What stands out is that our win rate in the market has improved dramatically. For this year, our win rate has expanded 300 basis points. This is I believe, a reflection of our strategy, the cultural shift we've been pursuing, as well as the services we are now being recognized for. It's also a reflection of our impact on our clients' business. As expected, we are seeing the benefit of Capco's consulting edge in our large deal pipeline. We are now winning in cloud transformation, engineering services, data, digital transformation, and security. Our clients are continuing to place their trust in us to help them turn into digital businesses. On the M&A front, you've seen it, we have continued to pursue aggressively on our strategic fits. We announced the completion of 2 acquisitions in Q3. The first one is Agile, a transformational cybersecurity consulting provider that focuses on risk and compliance, information and cloud security, and digital identity. Agile is truly recognized by security and risk leaders for its unique business-aligned cybersecurity capability, for their deep understanding of the changing regulatory environment, and enabling cloud transformation that help secure the modern enterprise. The second acquisition that we completed was LeanSwift Solutions, a US headquartered system integrator of info products whose service capabilities include ERP, e-commerce, digital transformation, supply chain, warehouse management system, business intelligence, and integrations. To be clear, this acquisition will expand the capabilities of Wipro's full-stride cloud services. We're very excited about these acquisitions, and we've welcomed so many new colleagues from Agile and LeanSwift into Wipro recently. On operating margin at 17.6% in Q3, we are ahead of our stated range of 17 to 17.5%. These margins were delivered after an incremental 2 months impact of salary increases in September 2021 that covered 80% of our colleagues globally, and an equity grant for our senior colleagues. We continue to invest heavily in our business across sales transformation, capabilities, and talent. I will now provide some finer details on markets, on service offering and sectors. Americas and Europe, our top 2 markets, grew at 28% and 38% respectively for the quarter in year-on-year terms. In Americas 1, we grew 23% year-on-year, 5.2% sequentially, with all sectors showing strong growth. Communications, media, information services grew 30%. Consumer goods, life sciences grew 25%. Healthcare and medical device grew 16% year-on-year. Now, in Americas 2, we grew 33% year-on-year, with strong growth across BFSI and manufacturing. The order book, in terms of annual contract value, grew over 47% year-on-year. This was definitely led by good overall bookings in the bucket of $10 to $30 million. Now, our European business has delivered an outstanding year-on-year growth of 38%. Germany has almost doubled. Benelux grew 24%. Our UK business grew 40% year-on-year. The momentum on deal wins have accelerated this quarter all across the region, and our pipeline has several large deals above the $100 million range for the next quarters. So we are very confident about how they are shaping up. I'm sure you know where we were with, you remember where we were with our European business a year ago. So it's a great turnaround story here. Our APMEA market grew at 13% year on year. All our major markets are growing sequentially. Overall, the order booking in TCV terms are looking healthy, with 37% year-on-year growth, excluding acquisitions. This should definitely support the growth agenda in this market in the coming quarters. If we look at it in detail, one of the key pillars of our strategy is to grow our existing large accounts and deepen the relationships. Well, our top 5 customers grew 36% year on year, and top 10 customers grew 37% year on year. In the last 12 months, we have added 7 customers in the more than 100 million bucket and 9 new customers in the more than 50 million bracket. This is quite a significant shift, one that we believe will continue. From a service offering standpoint, our IDS global business line grew 37% year on year. Most of the sub-practices showed a healthy growth. Our engineering business grew over 26% year on year in Q3 and grew at a compounded quarterly growth rate of over 6% in the last 4 quarters. Our iCore global business line grew by 17% year on year. Most sub-practices grew in double digits on a year-on-year basis too. Digital operations and platform led the growth with 18% year on year. We continue to invest and strengthen our partnership with hyperscalers and industry-leading platform players. We have, in fact, expanded our go-to-market approach with cloud and application partners now, resulting in us driving leading-edge solutions in the market. Wipro is therefore more visible in the market because of this. We are driving proactive solution development and campaigns with our partners on both horizontal and vertical solutions. All of this resulting in an increasing number of multi-partner wins. Our order bookings, if I look at that were a result of going to market together with our partners, grew 40% year on year. This is the highest ever. Finally, our cloud ecosystem revenues also grew at an accelerated pace of 30% on a year-to-date basis. Now, let me give you a sense of the kind of deals we are winning, right? We won a strategic ServiceNow implementation engagement from a large Brazil-based oil and gas company to transform their IT processes, increase agility and quality of services to business areas. Leveraging Wipro full stride cloud services, this is a significant ServiceNow implementation in the Latin market. A US headquartered financial services institution has also awarded Wipro a contract to transform the core banking functionality of their retail portfolio. Wipro will leverage its domain and technology transformation capabilities to bring in design thinking methodologies, improve agility, and increase business value for the client. There are more examples worth sharing, but I'd like to now focus on our biggest success factor, talent. Our focus on building world-class talent remains. We have worked very hard to ensure that scale is never a constraint for growth. We are on course to onboard over 70% more fresh talent from the campus in FY22 versus the previous year. Attrition is a reality across almost in all industry, you know that. It's been no different for us. I had shared though with you last quarter that we expect attrition to slow down only after a few more quarters. However, we now feel more confident of having stabilized our attrition rates in Q3, and we expect it to moderate next quarter. When we embarked on our transformation in 2020, we had committed to creating a vibrant, a diverse, and a more local leadership team, we've made progress on every count. Our leadership has moved closer to clients. The presence of senior leadership in locations outside India has improved by 13 percentage points. It's also quite relevant to note that nearly 50% of our leadership hires have been in the growth office and in the customer-facing global account executive roles, which are strengthening our frontline and sales. Over the last 18 months, we have improved ethnic diversity in our senior leadership by 20 percentage points, and gender diversity in the leadership has nearly doubled. Without a doubt, we have more to do here, but I'm proud of the change we're seeing in Wipro thus far, frankly. We're committed to being a company that respects diversity, walks the talk on inclusion, and is a beacon for change within our industry. On a more current and urgent topic, I'd like to reaffirm that the health and safety of all our employees remain our topmost priority. With the rapidly spreading Omicron variant of the COVID-19 virus, we remain very vigilant. And so as a proactive measure, we have decided to close our offices globally for the next 4 weeks. It is of some relief to us that 90% of our employees globally are now vaccinated with 1 dose of the vaccine, and over 65% are fully vaccinated with the recommended 2 doses. Our plans to return to office, even in a hybrid model for fully vaccinated employees, will be calibrated in the context of the evolving situation, keeping both our employees' safety and client preferences in mind. That said, we're continuing obviously to service our customers with dedication and agility as always. Staying with topics of great urgency, our sustainability efforts have continued with great momentum. Wipro has been included in the Dow Jones Sustainability Index again for the 12th time in a row, a testament to our consistent ongoing efforts in this area. Climate change and our ecological and carbon footprint is something we take very, very seriously. Finally, onto our outlook for the next quarter. We have guided for a revenue growth of 2 to 4%, which will translate into a full year growth of 27 to 28% year on year. To summarize, the demand environment continues to be robust, and our growth path over the last few quarters reflects this. We will stay on course with the strategic priorities I had shared with you in November, and I'm confident of sustaining the growth momentum we have so far displayed. On that note, let me welcome Jatin for his comments on the financials. Jatin, over to you.
Thank you very much, Thierry, and thank you very much, everyone, for joining us. I'll be brief. Our rupee growth is 28.5% year on year, which is very strong by any standard. Our operating margin has remained stable. Our ETR has in fact improved. We were 22% in quarter 2. We are 21.3% in quarter 3, which means that our EPS has grown by 4.2%. We have done an excellent job on DSO and working capital management. Our operating cash flow is 101% of our net income. We have $4.6 billion of gross hedge and 2.8 gross cash, and we have $2.8 billion of net cash on the balance sheet. We have $3.4 billion of forex hedges as of December end, and our realized rate for quarter 3 was 76.12. We have declared a rupee 1 dividend as an interim dividend for this fiscal as part of our press release. We have guided for 2 to 4% as Thierry spoke about at the constant currency exchange rates which are mentioned in our press release. We'll be very happy to take your questions.
Thank you. We will now begin the Q&A session. Participants are requested to switch on your video and unmute yourself at your turn. In the interest of time, request participants to ask a maximum of 2 questions. Varun, please introduce yourself and go ahead with your question. You can switch on your video and unmute yourself to proceed.
Hi, am I audible?
Yeah, Varun, you
Hello.
are. Yes. Yeah, Varun, go ahead.
Yeah, thank you. Theory, congratulations on a good set of numbers. I have a couple of questions. The first question being 2.3% reported quarter-over-quarter growth. Is it a little soft? Is it something of a worry? Or was it as per the management's earlier expectations? Or was there some seasonality over here? That's the first question. The second question was, you'll be growing full year anywhere between 27 and 28%. If you could just split what will be the organic growth contribution and the inorganic growth as part of this. A related question, Theory, with regards to this is, how do we really see growth for FY23? I'm not asking for any numbers here, but with all the initiatives you've undertaken as of now, would it be fair to assume or base our calculations that at least the organic growth in FY23 would be at par with what Wipro is doing in this year end? Sort of just one question. The attrition rates have gone high. It's gone up. And attrition continues to be a little bit of an elevated challenge for almost all IT service companies. In the last 4 quarters, almost 80,000, your company has seen almost 80,000 new employees coming into the company, which translates to almost about a third of your employees with less than 12 months of experience. How much of it is a challenge for a company like Wipro, that new employees coming into the company, do they really understand the Wipro culture? What measures you are taking, if at all, that Wipro continues to be an employer of choice and employees continue to remain with the company? That's all from my end. Thank you.
I have a number of questions, Varun. Instead of one, we had 4 questions, but Thierry, please go ahead.
I was going to say, Varun, thank you. I counted a little more than 2 questions, but we'll try to cover all of them, okay? So the first one is on the growth for the quarter. You ask about 2.3%. It's 3% constant currency term. It's right in the middle of our guidance to 2 to 4. So frankly, you ask if it was a surprise. It's in the middle of our guidance. We could not be more satisfied with this performance for the quarter at 3%. And frankly, if you reflect on the 2 to 4% guidance, this is a reflection of the trend. That's the level we've been guided to for the last several quarters already, and that's the level where we feel comfortable seeing the demand and the performance on the sales side. You ask the impact of M&A. We are not necessarily disclosing M&A impact, but I think you have all the elements of basically Capco and so on the 27-28% year on year from Wipro. Organic growth for fiscal year 23, or actually growth for fiscal year 23, as you know, also, we get this question all the time. We guide for the coming quarter. So I will stick to the rule or to our, methodology. But what I can say is that we are not seeing fundamental change in the market. The market continues to be very strong. Otherwise, we would have not had such a strong quarter in bookings. And so from our standpoint, that's why we continue to communicate and guide on 2 to 4% growth for the next quarter. That's our current pace.
I'll
So
take
have
it forward, Thierry. Yeah, the last question. So, Varun, you're right. It's heightened attrition across the industry. There is a big gap between supply and demand. There's a supply deficit, as we know. And as Thierry alluded to in his speech, that we had anticipated that it'll take few quarters more for us to bring it under control. We seem to looking at things stabilizing, and the rate of growth has come down significantly of attrition, and we believe in Q4 will get moderated. So that's one. Having said that, it is at heightened levels and it is an area of concern. We would have loved, as we had started in beginning of Q3, to open our offices and have a hybrid work and people could come together because, as you rightly said, cultures get created when people come together. And given the circumstances, it is not possible right now. But we are working very, very closely on this issue because this is the future of work. This is how hybrid work will happen. How do we stay connected? We are making big investments. We are making investments in looking at driving employee experience, employee engagement. In fact, senior leaders are joining to just drive that as an agenda for the company because that's what's going to impact us in the future. And the talent war, if it is won, we'll win the war in terms of the market. So we're very focused on this, and we are very confident that supply will never be a constraint to manage our demand. We have seen that last 3 quarters, we have added 10,000 people each every quarter, and we seem very confident going forward.
Swati, I request you to unmute yourself, introduce yourself, and ask your question.
Hi, Thierry and others. I just have like a couple of questions. One is, I wanted to get more clarity on what you asked about the 2.3% growth you had witnessed. So if you look at the growth, Wipro had been growing at 6.9% in the last quarter and the previous quarter at 12.2%. And so if you can, I know December is a seasonally weak quarter, but can you throw a little more light on the decline in momentum the Wipro is seeing? Are there any particular factors that impacted it? That is one to three. And if you can also share the total ACV value, which you had said had increased by 27%, if you can share the value. I have questions to Saurabh too, but once Thierry asked, I just have one question for Saurabh.
Swati, I'll take the first question, but the second one, I don't think I understood. Sorry, the line is not perfect. I didn't really hear what you said.
The total annual contract value, if you can share the annual contract value, which you had said it has 27% year to date.
Yeah, absolutely. So on that one, total annual contract value 2.85 billion for the quarter. Performance. So again on the momentum. I mean, for sure, for the last few quarters we've guided 2 to 4. It means sometimes you can go a little up, a little down, but we have a range, and that's how we are guiding. Here we are right in the middle of the range. It's true that in quarter 3 you have furloughs, you possibly have less working days, but it doesn't matter. The reality is that we have the same level we have the same momentum, we have the same growth. We see more or less the same response from the market, if you like. So basically for us, we don't see it as a slowdown. It's just we're keeping the momentum of the last quarters.
Okay, and Saurabh, the hiring. So are you stepping up the hiring again in the light of the increased attrition? We are seeing 17,000 freshers is what you had shared last quarter. So are you increasing the number for FY22?
So Swati, as you know, freshers need to be planned. We are going ahead at 70% more freshers will be added in FY22 as compared to last fiscal. And for FY23, we will be going with 30,000 freshers. So it's another significant shift from what we're doing in FY22. So we continuously would be making sure our supply is not a constraint to manage the demand environment.
And also one more query on the attrition front. So I saw that Wipro had rolled out ESOPs, a restricted stock unit for employees. Is this a effort to retain the employees? Could you share more on the efforts proposed to retain the employees?
So I think the stock units, the equity which we share is for senior leadership. It is done annually, so it's nothing which is out of cycle. It's planned every year in December, and that was done in the quarter. So that's as per plan.
More efforts you're doing, maybe the wage hikes. Can you talk about?
We have done, as I said, we have done, just to give you 3 data points, and I know we'll give you quickly. Apart from everything, as I said, there is a supply deficit from a demand environment. There's a gap there, but we are doing whatever it takes. We have had a second round of salary increases for 80% of our employee base in this current quarter. We have done 3 rounds of promotions for 80% of our employees in the last 12 months. So every 4 months, we have actually given them promotions. We're creating opportunities because we could do it, because we are growing fast. There are opportunities for people to grow. So we're making sure we are able to do that. We're continuously investing in on freshers and upskilling. We're able to try to move people to areas which they want to work in. So there are a lot of things which we are working towards to make sure, and that's why the outcome of that is you're seeing is that as we feel more confident of a much more moderated attrition in the coming quarter. Thank you, Swati.
Sajid, please introduce yourself and proceed with your question.
Yeah, hi. Good evening, gentlemen. Sajid here from BloombergQuint. Just want to get a color of the TCV growth, which we are seeing. If I'm wrong, Thierry mentioned that the total contract value was 2.85 billion in the third quarter. How do you see this pipeline? And do you see a little bit of sluggishness coming into this pipeline going forward?
No. So 2.85 is ACV. We do not see, Sajid, any sluggishness. Actually, the performance on bookings on other books has been strong in every of our market units, in every market, in every service lines and sectors. We actually see the opposite. We see a very strong demand. Another indication, Sajid, of that is the evolution of our pipeline, and our pipeline, which are deals that we should be able to close over the next quarters, is the strongest it's ever been. And finally, our win rate is improving, as I said, versus what we had in the past. So more pipeline, a better win rate should continue to sustain, nice performance on bookings.
And do you see pressure going forward with respect to supply side? You are hiring a lot in Q4 and FY23, but wage costs, do you see that going up as going forward? Is that going to be? Is there going to be better, more pressure on the margins, and will that require you to, do further wage hikes as you go into Q4 and subsequent quarters?
So there's several points in your question, Sajid. The first one is, is there a pressure on the supply side? I think it's clear. Yes, there is one in the market today, obviously, between attrition and the fast growth. By definition, we are hiring a lot of people, and so there's a certain high activity in that space. Is there a would it help if there was lower attrition? Definitely yes, and that's why we're welcoming the fact that attrition will moderate in Q4, and the fact also that we feel we have a better grip on this attrition. Is there pressure on the cost side? I mean, it's clear that hiring lateral is usually more expensive. But we are doing a lot of activities, and we have onboarded a lot of freshers, 70% more than last year. I can't even tell you how much more versus 2 years ago. But I think it's a way to balance. So net, I think we should be able to maintain, and therefore, the feeling that we can sustain our margins as well.
Okay, thank you.
You're welcome.
Kushal, please unmute yourself and proceed with your question. Kushal, please introduce yourself and go ahead with your question.
Yeah, we can move to the next person. Kushal is not there.
Sure. Uma Kannan, you can introduce yourself and proceed with your question.
Yeah. Hello. Good evening. I'm
Hello.
Uma from the New Indian Express. I have a couple of questions. Like I could see your top markets have performed very well in this quarter compared to last quarter. So, like, what are your plans for these markets in the coming quarter as well as in FY23? Also, in terms of total deal value, what are your plans going forward, and what can we expect in terms of the deal trends?
So the first question, if I understood well, was on the market, on the growth in the markets, right?
Correct.
Okay, understood. Okay, so what should we expect? Americas will continue to grow solidly, Kushal. The Europe is, growing and will continue to drive growth. In Europe, we see growth in every market. And in Asia Pac, we have been growing well as well. Some markets like Middle East where we hadn't grown and we are starting to grow again. So from a geographical standpoint, I would say, and Latin America is a growth area for us as well. So all these markets are growing. If I'm looking at sectors now, I would say, definitely banking and insurance are growing. Energy and utilities will resume growth and will accelerate. Manufacturing is doing well. There's clearly a recovery of the manufacturing sector post, first waves of the pandemic, and we see growth as well in healthcare and in consumer. So across sectors as well, frankly. The second point I missed that. Sorry.
So what can we expect in terms of the deal trends in the coming quarter as well as in FY23? What kind of deal trends that we can expect?
Hey, Stephanie, you want to take that one?
Sure. Thanks, Uma. We see a very robust pipeline of deals of all sizes. So large deals, some mega deals, as well as Thierry mentioned earlier, medium and small size deals. And we think that trend will continue to have a healthy mix. You'll see that we're focused on the market and driving value with digital transformation and cloud transformation. And we continue to invest heavily in our teams that are out in the markets with our clients and with our capabilities, and doing that with our partners. So I think we'll continue to have a robust pipeline. I think it'll represent all types of deals. And I think the value that we'll deliver in our solutions will help us achieve, better pricing in certain instances as well, where clients are looking for more value and scarce talent. So we're very excited about the pipeline and the prospects for Q4 and next year.
Thank you. Thank you.
Ramita, please unmute yourself, identify yourself, and proceed with your question.
Hi, hello. So my query again, a follow-up to the last query would be, since you mentioned that pricing is improving, can you give us some color in terms of what offerings or what areas within your portfolio have been able to kind of basically for which clients are kind of open to increasing to better pricing? And also a question for Saurabh would be, in terms of attrition, where exactly is the leakage happening? Like, we have talked about all the measures that are being put into place, but what area, what set of employees? Is there any, has that been identified where, where we can plug the leakage basically? So yeah, these two queries. Thank you.
Romit.
Yeah,
Yeah, Romit, I'll go ahead with the first one. So I think we are definitely seeing a slight positive, I would say, step on pricing, and that is reflected by both factors. The first is the kind of work that we are doing, the kind of value we are delivering to customers. So that is definitely a step up, a secular movement towards that. And the second is also regarding the sort of scarcity of certain skill sets in the marketplace, and Wipro's ability to bring on board at the right time, at the point of impact to our customers. And these two really are, I would say, the key drivers for the slight, as I said, positive step that we have seen in the pricing in last few months.
And to your second question, on where are we seeing the pockets? The pockets are in high growth areas. So if I look at on data, on cloud, on practices like Salesforce, and some engineering, these are the areas where we are seeing the high growth areas and where we are seeing attrition. And the experience where we are seeing is between 3 to 8 years is where we are seeing the maximum attrition of people in that experience bucket. So these are the two pockets which we are trying to focus on. And we are trying to see that if we can build a good pipeline of full stack trained freshers to take up this over a period of time, both from an attrition, growth, and cost perspective, it's a plus for the organization. So that's our endeavor as we move forward in the coming quarters.
Just to follow up to that, Saurabh, what part of, like you had mentioned, I think around 25,000 freshers that were planned for this year. So what share of that has already been onboarded?
We had said 17,500 would be onboarded in this fiscal. We have already onboarded 17,000. So we are looking at a very few number in the last quarter there, because the entire process gets over in the first, and we want onboarded everyone. For the next year, we're looking at 30,000 plus freshers. And it's a cycle, as you know, people have to pass out and then come. So that's what we will see.
Thank you.
Sunita, please identify yourself and proceed with your question.
Hi, gentlemen. My name is Sunita Nagpal. I'm from UP now. Wishing you a very happy new year. Terry, my first question to you is that if you look at the deal wins that you had so far in this year, basically you clocked 1.9 billion, and if I take the run rate of every quarter of roughly about 600 million, and you will be finishing the year with 2.5 billion dollars kind of deal wins in this year. Last year we saw a substantial bump up in last 2 quarters, which was largely because of the 2 mega deals that were bagged in each of the quarter. Are the mega deals becoming more elusive in this year, or there are some in pipeline that you're hopeful that you will be bagging? That's my first question.
Yes.
I'll ask the second question after you answer.
Okay. So it's actually a very good question. The fact that indeed exactly a year ago we are closing Metro deal, and this which was definitely a mega deal, $1 billion deal. The performance in sales this year or this quarter that has been uniquely strong, the strongest ever, actually has been done without a mega deal. So that's interesting. We haven't lost any mega deal in the quarter. We actually have some large deals or very large deals in the pipeline for Q4 and Q1 of 23. So we are very looking forward to it. There's a possibility, but I might be wrong, Sunita. More time to investigate and understand. But there's a possibility that because we are seeing it in our relationship with our clients, in some cases, some of our deals are large deals, are coming in chunks, as opposed to one just because of the necessity to drive speed and agility from the client. But for us, we take it the same way. Whether we have three large chunks adding up to a mega deal, or a deal signed once is the same. It's really depending on clients' expectations and way of doing things. Having said that, it's true that in our performance this quarter, there was more, what I would say, some large deals and a lot more than ever, medium-sized deals.
If I can talk
That was
about
my
the
first question, Sunita.
yeah, if I can follow up with the question that are you seeing inclination from the clients willing to pay more since you're facing supply side issues, and you talked about the speed is of essence. Are the clients willing to pay you a higher price if you are giving them early delivery, or I mean, however you define it?
I would say yes. We are seeing it in cases, regularly we see, because you're absolutely right. Often the client's not about so much about, rates. It's also about, can you do it today? Are you able to respond to this expectation and, turn into execution now? And impact of transformation for our clients are such that, it's more about reliability and speed than it could be potentially about cost. And so we are seeing it. We are taking the opportunity to go back to clients and discuss with them rates when we feel that, this is what needs to be done.
Okay, and if I can ask last question, other than attrition, what is keeping you awake at the night? Any worry points or the soft spots that you see in your term that could derail the growth story?
Sunita, frankly, I tell you one thing, the really, if I had to think about something that kept me awake, I particularly reacted to the new wave of COVID, and that's why we decided to ask all our employees to stay home and not travel, not go to the office unless necessary. Because I still remember what has happened, in particular in India, in the April to June timeframe, and I don't want to leave it again. And I don't think our clients or employees want it either.
We have just enough time for one last question.
Varun, would you like to go ahead with your question?
Hi, Thierry. If I can just ask one last question here. Thierry, Wipro has been has acquired a lot of companies under your watch. How do you really see the integration risk? And if I have to ask you, what if you could share, how exactly is Wipro making sure that much of the companies which it is acquiring continues to give it all the requisite benefits and there are no integration challenges? Thank you.
Yeah, Varun. So good point and good question. Thank you. I would say yes, you're right. We are doing regularly acquisitions when it makes sense, and will continue. It is definitely part of our strategy, and I think it's always done with a lot of, it's more strategic than opportunistic. We really want to focus and build, patiently and in an organized fashion our machine, and reinforce our position in the key areas. My view is that as we are doing more acquisition, we are getting better and better. And so, unlike people would believe that, you need to do only a few acquisition because it's difficult. Actually, we are learning, and I'm sure my colleagues could speak about it too, that, now we have a PMI, so we have a PMI team. We have a very structured process. We have systematic reviews on multiple fronts, whether it's on the legal front, on the tax front, on the IT front, on the HR front. I think we have all these processes, but we also have now, it's a systematic part of our reviews and of our management a routine to review the integration of those entities. And I tell you one thing, I'm very satisfied with the way we've integrated those companies. We do not have more attrition in these entities that what we see in our own business. We see that we are able to hit and very often should deliver more than what was in our synergy plans and so on. And so I think it's just becoming more part of our DNA at Wipro.
We'll take one last question.
Shivani, would you like to go ahead with your question?
Yeah. Hi. Can you hear me?
Yes.
Yes.
Okay. Good evening, Thierry. Thierry, just a simple one question. What has been the inorganic growth rate for this quarter? If you could share that. Saurav, and a quick follow up to the numbers that you shared. 30,000 for FY23. For FY22, if you could just reiterate the fresher hiring and also the total, lateral hirings that the company has done. That's it. Thank you.
Yeah. So, Thierry, I'll go ahead with the first one. And before I respond on inorganic, let me clarify a point on which came up earlier. We have grown 3% sequentially versus our guidance of 2 to 4%, and that is the number that we should look at because that's the operational work that has happened. So if you are 100, you become 103. Operationally, you've delivered so much projects to our customers and converted so much revenue. Sometimes, because of the exchange rate movement between the previous quarter and current quarter, you would see that your revenue falls by a particular number, and that impact is also reflected in the realized revenue, which is 2.3%. Interesting is Q3 last year, we had 0.6% higher, which was a gain on Forex. This quarter, we have 0.7%, which is loss on Forex. But my request is to evaluate our performance, look at the constant currency number, that's true reflection of execution on the ground. Your second question on the inorganic versus organic, as Thierry alluded to in the beginning, that was part of our guidance. And as we integrate well, sometimes the revenue comes from the core entity, sometimes the revenue comes from Wipro. We see it as a single stream. The more we distinguish, the more divide we create. So after a couple of quarters, we see one revenue stream, and that's what we have shared with you.
On freshers, 17,500 for FY22, 30,000 for FY23. Those are the numbers which we're looking at. On laterals, it is dependent on demand. I again repeat, supply side is stretched, but that will not be a constraint to manage to support the demand which we have.
Okay.
With that, we'll close the press conference. Thank you so much for joining.
Thank you very much, everyone.
Thank you very much.
Thank you.